As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a returning guest tonight. David Morgan, the founder of themorganreport.com, is here with us again on Reluctant Preppers. David is a renowned silver guru and commentator on the precious metals markets. He's here with us again on Reluctant Preppers to give us an insider's look at what's going on with gold and silver. David, thank you for joining us again here on Reluctant Preppers.
Well, thank you for having me.
When we had you in about a month ago, you gave us a heads up based on the Commitment of Traders report and other topping signs that you were seeing in the near term and the short term gold market. And we actually saw that similar comment from Mike Maloney. We discussed that briefly. And based on that, Reluctant Preppers was able to make a successful trade selling or buying puts on GLD, and I really appreciate that insight. And I know that doesn't always go the way that it seems like it should. Especially, we've been told so much about manipulated markets and how these don't always behave as naturally traded free markets should for natural price discovery. But just wanted to give you a hats off for that insight and ask you about. We've recently seen further discussions of gold running up against the top of its trading channel and possibly breaking through. But just wondering if you could give us your update on the overall outlook for the gold and silver markets at the start of 2017 here, what you think the big picture is going to be and what the big driving factors are that are in play right now.
Well, right now, first of all, thank you for the compliment. Secondly, the way that I, trade and I show it in the, premium level service, which is really all we have now. We have that in the mastermind, is different than almost anyone else teaches. And it's basically market driven. So, regardless of the commitment traders, which is an aid, a help, a tool, I don't want people to get too dependent because that alone is significant, but first of all, not as significant as it once was. And secondly, the way I set it up, it's the market drives it. So in other words, the market has to make a move. Once that move has been established, then I have the Morgan rule. If it hits the Morgan rule, then you can basically make the trade. And anyway, it's coming back on point. 2017, I think it'll be a good year. First of all, the January has pretty much been an up month for the metal seasonality now for a while, so that we've got that going for us. The other thing is that the markets in the metals primarily enjoy up moves during uncertainty. When the markets are uncertain, then there is more money that's, the risk on, as it's talked about in the mainstream press. We have that to a degree, I think, more perhaps than people have accounted for, and that's my opinion, due to Donald Trump, because he is certainly taking action right off the bat as soon as he sat down in the Oval Office. However, there is a bit of unknowns around him based on the cabinet that he has picked, based on what he said and what will he follow through with and what will he back off on and what will he moderate on or whatever. So that is uncertainty. Further to that, going back to my initial discussions about the presidency way back when many thought that Trump wouldn't make it to the Oval Office, is the debt structure that is global, with the United States being about the 10th most indebted nation state in the world. And all of these nation states are in a predicament they can't get out of. It's a debt-based monetary system globally, and almost all of them are over-indebted and really no way out. And that will, excuse the pun, trump anything out there regardless of the best intentions. So this is the overlying theme that we can't forget about. And to reiterate slightly what we said about it last time I was on your show, Dunnigan, what I stated was that with the implementation of a harder fiscal policy and lower taxes, there will be a Trump effect, which means that people will be getting, more money will be flowing through the United States. There's no doubt in my mind. There will be infrastructure's improvement, and that's not a bad thing. However, the structural problems that have been enforced for the last decades cannot be overcome. And so that's the theme that everyone has to bear in mind.
And in that regards, you've mentioned, others have mentioned here that there's been even some discussion of whether a Trump administration would consider any form of a gold-backed currency. Do you have any research or insight that would indicate whether there's any validity to that rumor? Yeah,
I would reserve judgment on that. Mostly what I write and many others, it's an opinion letter for the most part. I mean, for me, I get as many facts as I possibly can. I mean, we do analysis on a resource company. We do, much more than just gold and silver. We look at all the resources except energy. We had a play that was very important on the zinc market. We were the first to come out with zinc being a very critical base metal that was going to get a price squeeze to the upside because these major mines were depleting and running out. And that means that there would be pressure on the zinc market. Well, we found a company that had a good silver credit to it, as well as zinc, and that company's done quite well for our subscribers. So these are things that you could go in and get facts on and do a sensitivity analysis, and based on how well the silver price does or how well the zinc price does, you can get an idea of what the leverage factor is. But coming back on point, I'm going to reserve judgment because I just don't know enough yet to know what others are claiming to know about what the possibilities are of a gold-backed currency. Normally, those things are forced on the administration, and I'm not talking about the United States administration. I'm talking about through the 4,000 years or so of recorded history of when you go back on a gold standard. If you look at the United Kingdom or Great Britain, way back in the days when the Bank of England was in a crisis mode, Sir Isaac Newton decided the only way to resolve this massive problem was to go back on a gold standard. And the reason he became a knight and was given the title of Sir isn't because of all of his genius in the world of physics. It's because he put the Bank of England back on a gold standard, and that's what got him knighted. So this is, an example of, returning to a gold standard. So will we, won't we? I don't know. I tend to favor not in favor that this is what I want. I favor, as an intellectual exercise, what Jim Rickers has written about and spoken about for quite some time now, about moving the paper paradigm to another level, which means going to these special drawing rights, which is paper gold, and for all practical purposes really doesn't have any gold. I think that would be the most likely scenario, but then, keep discussing it, and you can interrupt me if you wish. The Trump administration probably isn't all much for a global currency, which basically is what an SDR would be run through the IMF, which is basically United States controlled. So lots of unknowns. Is gold a possibility? Yes. But do I think that there's much to do with it right away, or that's even in the, let's say, one of the top 10 next things to do? I don't.
Do you see any new trends emerging, or do you expect any this year in terms of global economic forces and global demand for and supply of precious metals?
I do. Again, I want to, I'm going to give you the same answer. I want to reserve judgment because what's happening with this new nationalism, I'll call it, is that there are going to be a lot of changes in the way the world trades. And there'll be backlash and repercussions depending on how things are negotiated. And that means that there's too many unknowns at this point. So we could get in a situation, we meaning the world really, and if you want to focus on the United States, that's fine, but where if tariffs are imposed, you're trying to level the playing field where no nation state gets an advantage over anyone else. These are very, very difficult things to do, and they also could have unknown consequences. So because of that, what does that mean to the precious metals? Again, it means uncertainty. It probably puts upward pressure on the metals, and it could certainly trigger perhaps an upleg that, I'm not forecasting at this point in time, but it's very, very difficult to sort out because certainly Trump has shown already that he's a doer, not a talker. But we really, from my perspective, need to be a little bit cautious on the established connections that we have already made with other nation states and negotiate carefully and hopefully in the best interest of all, because that's really what free trade is all about. I'm not saying we have it. I'm just saying that that it's too early for me to really grasp exactly, and don't get it exactly, but to grasp the overall idea of what the administration thinks about foreign policy, trade policy, what's a free and fair market, and how gold will play into that.
We had the opportunity to interview Rob Kirby earlier this week, and he was talking about what he thought might be a dramatic factor if it were to occur, which would be if the Trump administration announced and followed through with a full audit of the U.S. sovereign gold reserves, that might unearth kind of a realization that would have a ripple effect in people's awareness and consciousness that could end up dramatically driving demand for physical gold. What does your research indicate to you about the reality of U.S. national holdings or other sovereign state holdings of precious metals worldwide? And do you think, based on your research, that they have been depleting or amassing, or is there a shift from east to west or west to east? Can you kind of give us your picture of where you think the physical gold is being held at national levels and where that leaves the U.S.?
Sure. First of all, it's interesting what Rob said, and Rob and I aren't real close, but we certainly know each other and respect each other's views. I had the thought years ago, Dunnigan, 30 years ago, 40 years ago, that once the cat was out of the bag, that the United States is gold depleted. In other words, for all practical purposes, there's no gold in Fort Knox. That once that happened, that would be the shot heard around the world, as a metaphor, the second time. And then I started to change my view, because it seems that there's nothing that wakes up these markets in the precious metals. I mean, we've certainly had some good runs, but even if that were to occur, I'm not sure what the repercussions would be. I'd like to think that my initial thoughts on it are correct, but I'm certainly at this point not sure what would happen. What I will say is that Bill Still has done a great deal of research into the Fort Knox holdings, and I've had private conversations with Bill a few times on exactly what his friend had uncovered about the holdings of the gold market, or the gold bullion depository at Fort Knox. Also, the Federal Reserve has openly admitted on film, you can look it up, I put it out on my blog a few times, that the Fed has no gold, that in the 30s, that the gold that the Fed owned was given to the Treasury or sold to the Treasury, and that the Federal Reserve holds gold certificates. So the Fed only holds pieces of paper that have the word gold on them. And the further you go down this trail, and I don't have time to go to every most minute detail, but when you see the accounting office, if you take somebody from the establishment side, they'll tell you, well, look, they report it every year, and the word is gold. But if you look at what gold means, legal sense, what it really means is a derivative. It doesn't mean physical gold. So I am of the strong opinion, I don't have fact, but I have a lot of circumstantial evidence that points heavily to the idea that the United States at Fort Knox has very, very little physical gold. The gold has basically gone into the BRICS countries, primarily China. Russia has certainly built up its gold reserves as well. And I think that most that's held in a lot of other nation states is on a swap basis, which means that they might have a certificate and physical, but if they wanted to get all of their physical that they believe they have, it might become interesting to see how encumbered it actually is.
So it sounds like overall you're indicating that most the Western world central banks have been depleted of their actual physical gold holdings, or mostly, and BRICS being Brazil, Russia, India, China. Did I get that right?
Yeah, that's correct, and it's mostly China and Russia that have the physical, and I'm sure there's plenty of banks in the U.S. that have some, but no, overall the major shift has been to the east from the west, and has been going that direction for quite some time.
So we've asked you this question before, do you see any reason to change your observation in the past that a apparently artificially suppressed gold price? Oh, that's one more thing I just wanted to bring out. Rob Kirby was reflecting that it's very curious to him, as he's learned more about Bitcoin versus physical precious metals, that ironically there's an opposite reality going on in this upside down manipulated world we are in, that the physical precious metals markets like the COMEX, etc., seem to be able to be manipulated because there's no enforcement of regulations about the amount. In other words, there's an unlimited amount of paper virtual gold promissory notes that can be sold into the market to drive down the price without limit. He said, but however, in the Bitcoin market, it isn't that way. You can't sell a Bitcoin you don't own. So could you give us do you have any reflections on that, as far as how we started this whole discussion by talking about being able to observe and predict trading opportunities by observing market behavior? Do you see it the same way, that the precious metals markets are so unenforced that there's no real active rule of law, and that really they are able to basically with impunity make the price go wherever they want by selling basically unlimited amounts of virtual metal into the market?
Yes, I'll add on to that a couple of ways. One is that, as you state, basically, regardless of what the contracts say, on the short side, you could basically sell as much silver or gold that doesn't exist on the COMEX as you wish to. But on the same platform, on the COMEX itself, you're only allowed to go long, take delivery of 1,500 contracts in silver. So in other words, you can sell as much that doesn't exist as you wish. That's the reality of it, even though there are rules. But on the long side, you are only allowed to take 7.5 million ounces of silver off the exchange at any given time. So that is, obviously favorable to shorting the metal. But the one thing that, I need to point out is, regardless of how the price gets there, manipulated or not, and of course, I'm been in the camp forever that's manipulated. In fact, did a whole chapter in the Silver Manifesto. I mean, if anyone really wants to have an academic argument that's almost irrefutable, by the Silver Manifesto, and study that, and learn what the Sharps ratio is, how it's achieved, and how this is impossible not to be a manipulated market. So let me get that out so that people don't think, I've changed my opinion. No, it's not even an opinion. It's a fact. But regardless, what you also have to consider is that when the price gets down to, $17 silver or, $1,100 gold, you could still buy gold and silver physically, at least in small quantities, at those levels or close to it. Now, there have been exceptions to that, and I know that, and I want to make clear that everyone knows I know that. But the idea was, like in 2008, there was a 30% premium on the silver market if you bought it off of eBay or most large retail dealers. But you could still buy silver, which is what the exchanges sell. In other words, 1,000-ounce blocks of silver at the spot price. And I did, in fact. In 2008, I got it around $9 per ounce. Whereas on eBay, you're paying about $13.5 an ounce for a finished product like a silver round, silver coin, 10-ounce bar, 100-ounce bar, that type of thing. So we really haven't seen that the physical market has been moved away from the paper price very often. It's taken place a few times for a very short duration. In fact, on that same topic, I wrote a white paper on that for public dissemination about the arbitrage opportunity that it what was available. And a lot of my peers in the sector were basically of the opposite opinion. But not to pat myself on the back, certainly I've made some bad calls, and I admit that. But I, again, was right on this one. So at some point, it probably will break apart. But I think the more important point is that with the world the way it is, with the uncertainty we have, and the absolute certainty that this is a mathematical imperative that this market in the paper derivatives across the board, primarily in the interest rates, which Rob is better at than I am, is going to cause massive upheavals throughout the financial system, which means if you need something to rely upon and have safety, something that will remain intact, and something that will help you navigate through these troubled times, you need physical precious metals. There's no doubt about it.
Well, David, as we always ask, people may be hearing you for the first time if they're new subscribers. So if you could tell all of our viewers where to find your work online so they can take advantage of more of your insights as you continue your research.
Oh, if you go to themorganreport.com, you can get on a free webinar called Is There a Silver Shortage? I go through that. This is an idea that most people don't really get, and you get some information even from quote-unquote silver experts that isn't really valid. Let me restate that. That is using one source only rather than all sources available to determine whether or not there's a shortage, so you can get that for free. If you want the Riches in Resources report, I have a website called richesandresources.com. You can go to that website and you can get the two films, one on the decline of the age of empire and the other one on what happens in a currency crisis, exactly with this documentary called The Empty ATM, which is probably, in my view, the most likely scenario that we'll see in the United States when hits the fan. So those are two places you can go for free information. Both of them are well worth the price. They're free. And you will get a better education, which is one of my primary purposes, to help the public at large. And if you're so inclined, I have an opportunity in the resource sector that I believe is extremely important longer term to mine what I call e-waste, electronic waste, which is highly profitable relative to most gold mines, even very, very high-end or high-margin gold mines. And this is something that is available for a very, very much of a gift. I mean, it's a spin-out type of situation where you get free shares. But I'm not going to give that information out for free because it would be wrong of me to do that to our paid website members at this point in time. But it is a window of opportunity. The window will close on the 27th of February. So if you're so inclined to beef up your portfolio for 2017 and imagine that you're going to be talking about this new technology and you were one of the first to know about it and act on it in 2017, we'd love to have you as a website member.
Well, David Morgan, founder of themorganreport.com, we're always grateful for your return visits back to give us your insights here on Reluctant Preppers, and just thanks for having you back.
Well, thanks for having me. Appreciate it.